All right, hello everyone, and welcome back to the daily update on my 1000 day challenge. So this is day 665, so let's get things started. All right, so first and foremost, the balance remains the same. Actually, I've taken two bull or long trade in itself and those based on price action, simply because I did see in terms of a bullish green reversal candlestick on the 4-hourly chart itself. But unfortunately, if you do look in terms of forward chart, what we do get is actually a green bullish candlestick over here. But momentum actually did breaks towards the upside, which I did trigger my buy order. But then after it was strongly rejected, and by the time I wake up, it was around here, and I just closed the trade off immediately. Know that we still wouldn't have hit my stop loss over here, but definitely this is not what I want to see when I enter for a quick kind of a bounce setup. I do want it to break strongly above, and even if it do drop, it is to retest and find this region as a place of support itself. That will make me confident to stay in the trade. So because it didn't do that, I exited out the trade and taken my existing loss at around 50 or 60% the way through in terms of the stop loss wise. And if you look across the board in terms of US market wise, generally S&P 500 has done a very good potential reversal in that sense, because we've actually broken above the 20 exponential moving average on the daily chart, actually closed above it, which is a very good first sign. And right now today we actually have a bit strong momentum pushing towards a higher high. But bear in mind, as I mentioned, we still have this 4,160 region itself, which could prove to be a key resistance region itself, because it was previously acting as strong support, and even a weak support here before we actually breach over here and decisively stay below it for the time being itself. So there's something to bear in mind. And over, if you look into the Nasdaq itself, what we do see is a similar price pattern. But bear in mind that yesterday it was lagging behind the sense that it didn't manage to break the 20 exponential moving average. So there's something to bear in mind over here. So looking into this particular perspective, we do have this break over here, which is only one daily difference, which if we can actually close over here in the next 5 hours, will extremely be a good first sign that we could have a good push towards this 13,000 region itself, which similar to the S&P 500 will be a potential key primary resistance it will face if it does continue to go towards the upside of things. And moving along, if we go in terms of ASH itself, what we do see over here is that we actually did stay below 20 exponential moving average, which like what I mentioned yesterday. As long as you do not get a strong rejection off, I still do lean that we could have a potential reversal in that sense. So as long as this could be a bottom forming an accumulation zone before we have a decent bounce and a continuation pattern towards the upside in that sense, simply because we do see a lack of selling pressure, which could give rise to signal to people to the smart money to get in terms of accumulation price in that particular perspective. That even though no matter how far they try to push the sellers or trying to drive further selling pressure off, it doesn't seem to be working in that sense. All right, and then finally for KVAC, we also do see but the key thing I might say is that for the KVAC itself, we do want it to break above the 50 simple moving average on the daily chart. We right now is still acting a key resistance, but I can see that the frequency of it being tested is getting increasingly higher over here. So the distance between this retest and this retest is getting less days compared to this retest and this retest, and also compared to this retest and this retest, and also compared to this retest and this retest. So in this particular scenario, I do see that the chance of it breaking and shifting in terms of momentum towards the upside is really increasing by the day. So what we do need to see is that instead of breaking towards the upside, a break towards the upside will trigger a very much needed reversal and a very strong decent bounce to even retest this 200-day simple moving average on the daily chart for KVAC itself, which is around the $38 region itself. But by the time we do hit it, we could potentially be around $35 or $36 region itself. So that's one thing to bear in mind. And then finally, for Bitcoin itself, it's acting a little bit different from the rest of the market, because even though the US and China equity seems to be doing a lot better, Bitcoin does show some sort of a selling pressure in a sense. But bear in mind that even as long as you do not have a strong break below this region itself, which I mentioned, is a close below 28.5K region itself, a very strong bounce could still be likely to happen, especially if the equity market will continue to move towards the upside in the coming week. But that's not to say that Bitcoin could do the same as what the traditional equity market works as well. Could definitely deviate from it, which we have actually prior to the COVID period, whereby we were very much the correlation between the two markets actually not as high as what people see. So if that's it, that's something to bear in mind. Cautious, but I will mention this is my take on it. In terms of long-term investment-wise, I would still say here is a decent price to get in, depending on the risk profile. And in terms of a 100% portfolio itself, that you intend to allocate the Bitcoin, I'll be willing to put in 70% of the intended capital into Bitcoin at the moment itself, and the remaining 30% I'll be taking a little bit and adding it along the way. But more importantly, if we actually do fall towards lower level itself, I'll be very keen to buy even more at those lower levels. All right, other than that, with that said, I've come to the end of today. If